Welcome back, Alpha Hunters. All right, so the markets are closed for March the 31st. The first quarter of 2023 is in the books, and I am feeling a little bit under the weather, so we're going to get going. So the market really kind of had a nice little gap up to start out Monday. Nice little sell down, tried to bounce going into the end of the day, and then the last hour just kind of dropped off. Kind of ended towards the session lows, not at the session lows, but kind of down there. SPY then on Tuesday had a little bit of a gap down, a little bit of a trade lower, and then started to come to life here as it was kind of in the lower ends of this range. It's kind of been trading in between for the past few weeks. We can take a look at a little bit more of a longer term picture of that. But then on Wednesday, man, we got it going. Wednesday, nice solid gap up to weekly highs. And it didn't really do too much. It kind of just chopped sideways for most of the day and then pushed a little bit higher pretty much into the last hour or hour and a half of the day. It wasn't a crazy day as far as like activity. It was just mostly it was all done by the gap up and then a little bit of push there at the close. Thursday, the same kind of situation, gap up, a little subtle chop down for most of the first half of the day. And then towards the end of the day, nice little push to get off the lows in the day with a very nice lower wick on the daily. And then a little bit of a gap up on Friday, pushed higher for the first half of the day, kind of tried to settle out in the middle part of the day. Last hour then pushed higher, basically ending the day at the session highs. And we're going to kind of go over some of the different price levels and stuff like that. But just taking a look here at the hourly chart, this channel that I kind of highlighted over the past week that we kind of traded in, we've mostly just been trading in this inclining channel over the past 3-4 weeks, ever since the FVB banking collapse and a lot of the regional banking issues that we kind of had going on at the beginning of March. We've just kind of been in an upward trend in this channel. So far we haven't really broken out of the channel. We've kind of breached the upper ends of it back March 23rd, and then the lower ends back on March 24th. And then kind of breaching the upper bounds of it a little bit at the close today on Friday. So we'll see what happens on Monday and Tuesday, and we'll talk a little bit about that coming up. Okay, so sector rotation for the week. We had energies actually leading the way. Wouldn't have thought that, but they were up there. Consumer discretionary towards the second half of the week really climbed up. It was basically roughly in line through about Wednesday, and then Thursday and Friday the XLY got it going. We also had real estate up at the top performers of the week, materials, industrials, and then financials, tech kind of in line with the market, and then utilities, staples, XLC, the communications area, and XLV, healthcare, kind of at the lower end. So that's kind of basically how the market performed throughout the week. Just very much an interesting week. Not a lot of crazy rotation really kind of going on into safe havens or into risk on type stuff. It was kind of all kind of mixed in there. All right, so take a look here at the calls and puts. Week over week change for the options expirations kind of going out into the futures. What's really kind of interesting, what we notice here, still a lot of put buying going on this week, and a lot of the bullishness that we saw in the second half of the week. A lot of put buying still being bought out here. June was being bought up a lot. May 19th out here being bought up a lot. Also May the 5th also being bought up a lot on the put options. And May the 5th was new recently. Past couple of weeks had been added. So it didn't have a lot of volume, but you can tell it's starting to trade quite a bit. And May the 12th is the new one that was added this past week. So May the 12th saw a little bit of activity over the week. And we still are seeing, obviously, the big one as far as like expirations that are out there right now is April the 21st. And still seeing a lot of put buying there. And another thing that's kind of interesting here is this next Thursday. Remember, this next Friday will be a holiday. The markets will be closed. But on Thursday, the expiration for Thursday, there is quite a bit of call buying that came in. So I kind of wonder if there was a lot of people feeling the FOMO, hopping on that bullish bandwagon towards the end part of the week. Okay, so this is the SPY breakdown for this next week's expiration on April the 6th. And what you can see is we have a big cluster out here now for call buying. And a lot of calls out here. And really they kind of start here at the 407 is the first major spike So I think it's going to be hard for the market to probably end over that level. So yeah, it might be a little bit tough for the market to push higher and hold. We're going to kind of get into what I'm looking for this next week. But 408 also has a huge spike level, and then so does 410, 412, and 414. So a lot of call buying out there for this next week's expiration, and not really so much on the put side. I mean, there is kind of down in the lower parts of mid parts of the 390s, lower parts of 390s, and the mid parts of 380s. Yeah, I wouldn't expect us to have a whole lot more continued upside with probably a close. If we do push higher in the earlier parts of the week, I don't expect it to probably hold. I'd probably expect to see a sell down to come probably in the second half of next week. All right, so the VIX, we got the VIX this week that just traded down every day, just came down, came down. So we're seeing a lot of that volatility just continue to come down, which is making insurance on options pretty cheap. But did it come down a little bit too fast? Maybe. Maybe it was a pretty good drop off. Typically when we've seen strong drop offs before, we see at least some volatility come back in when we've gotten back down to this kind of level. So we'll see what we get out of this next week. The dollar started to climb a little bit today. Possibly nice little bullish engulfing daily action here over Thursday on Friday. So we'll see if that continues to carry into next week for Monday and Tuesday. The 10-year yield rolled a little bit lower today. Nice little move up on Monday and Tuesday. So we'll see what kind of comes out of the week here. Is it going to reverse and start turning higher as we go into next week and break out some of these highs and continue to push back higher? Not really sure how that's going to kind of go. It's been chopping kind of at these lower levels since it had the breakdown earlier part of March. 2-year yield also had a pretty strong earlier part of the week. Got a little bit softer, I guess, as the second half of the week kind of went on. A little bit of a sell down there on Friday, or a comeback down on Friday on the yields on the 2-year side. Gold, for the most part, is it dropped pretty good to start out the week on Monday. Nice steady climb as it went into the rest of the week. So we might see a nice little drop here on the GLD, and that would kind of correspond pretty well here with the dollar. Also, maybe have popping higher going into next week. So, yeah, that might be what I'm kind of thinking here. That might happen if it just kind of slowly continues to push higher. Then obviously it'll just push higher. But this next week, if it breaks down, I wouldn't be too surprised. HYG, the high yield corporate bonds. Man, these guys, whew, they were buying it up this week. Wednesday, Thursday, and Friday were just absolutely monster days. A lot of this might have been, playing catch up a little bit with the LQD, and take a look at that, hear that in a second, because the beginning part of March, when we were having some of those banking issues, man, the HYG was just getting hammered down. So it wasn't looking the best, but that definitely made a nice run to end out the quarter. So like I was just mentioning, the LQD wasn't getting hit nearly as bad in the beginning part of the month. So it was just kind of slowly grinded higher. Didn't have the explosive move to end off the quarter, but it still, had a pretty good second half to the week to end out the quarter. So I got a quick little article here. So insider selling raises warning flags about tech stock rally. And I'm going to read basically one sentence or one paragraph here. Data from the Washington service shows that more than 1,000 insiders sold shares in their companies in Q1 of this year. That's the highest amount of any selling by insiders since Q4 of 2021. Remember what happened in Q4 of 2021 when the NASDAQ 100 hit record highs. The data also shows that insiders are buying less of their company shares, with just 66 executives buying stocks in their companies in Q1, the lowest number of purchases in 2 years. So what's interesting about that, we were kind of talking about this on the live stream, is, well, I mean, executives, they buy and sell shares all the time. That's not a big deal. Yeah, but when you get it to be newsworthy, right? When you start to get a lot of insiders, they're all going like one direction. They're all selling or they're all buying. That is something that is worth paying attention to. The fact that it's basically up at the same levels as since Q4 of 2021, well, then what happened in Q1 of 2022? Well, we started the sell down in the bear market, then going into 2022. So It's just kind of an interesting relationship. We'll see what kind of comes of it. Maybe something to be a little cautious about as we go into Q2. Okay, so I came across some information a couple days ago about the Fed balance sheet and what the Fed balance sheet had been doing really for much of the month of March. And so I basically kind of sought out a ticker symbol or a way to kind of look up this information in TradingView myself. And if you use TradingView, the ticker symbol I found was a WRESBAL. It basically is a weekly, which is why the W is there, weekly Federal Reserve RES Reserve balance sheet look. Okay, so every Wednesday they kind of come out and tell you, hey, what the Fed balance sheet is, or what kind of changes have happened week over week. One of the few things that you notice is, well, starting here on March 8th, when they started having issues with some of the regional banks, well, then that next Wednesday, March 15th, you notice a huge uptick then in how much balance sheet paper the Fed was kind of injecting into the system to kind of help support the financials. One thing that's kind of interesting also is week over week, this Wednesday, it was pretty much flat from the previous Wednesday. So March 22nd to March 29th, there wasn't too much of an uptick in the Fed balance sheet. So take that into note for possibly what goes on this next week. I'm going to get into that here in just a second. But last thing I want to talk about on this chart is, you notice at the beginning of the year, we saw an uptick in Fed balance sheet. And guess what we saw in the stock market? A very bullish January. So does it correlate exactly dollar for dollar, or ratio to ratio? It doesn't really, but it definitely does kind of track some of the bigger trends as well. Because obviously the stock market bottomed in October. Fed balance sheet did not bottom in October. It actually bottomed at the end of the year. Have we seen probably the majority of the run here recently? Well, if they're serious about fighting inflation and getting inflation back down, yeah, they probably would be serious about probably reducing the Fed balance sheet, because they did say that at their past FOMC meeting that they do want to continue to shrink the balance sheet, even though they just haven't been doing that. So we'll see what they continue to do going forward as far as this is concerned. And I would probably find any way to kind of track this information. If you use TradingView, this is what I would use. Just watch it every Wednesday. I think afternoon is about when they come out with this data. I would definitely be tracking this information. Okay, so we're just looking at a 3-month chart here. So basically just every quarter is represented by a candle here on the chart. And one of the things that you notice is we have 2 back-to-back bullish quarters. That typically is the bottom of any bear market when you get 2 back-to-back bullish quarters, because we've never seen a bear market continue to kind of sell off and have a continuous bear market when they've had 2 back-to-back bullish quarters. So all steams ahead, buy it up. No, I'm kidding. I'm not going to promote that, but it is a very interesting statistic. Okay, we've never seen back-to-back bullish quarters and the market break down and make new lows in a bear market. So the closest we ever got was back in 2002 bear market, and we had a bullish quarter, we had a bearish quarter, we had a bullish quarter. We almost had a bullish quarter. Basically, it was just a doji. It was pretty much flat. We'll see what we get out of this next quarter. So some interesting things about the moves on Friday, I'm going to briefly look at this, is we actually did fill this gap back from February 16th to February 17th. So that gap actually did get filled. It almost got filled on a retest on March 6th, but it did not. And we were hanging just below it really until about the last hour. And then we just went smash right through it with that last little thrust part of the day right here. So yeah, it just went and smashed right through it. So yeah, we definitely filled that gap. The other interesting thing is the kind of level the market is currently getting into. We have what looks to be, could be. I'm saying could be. I'm not going to say it is. So we got a shoulder, neckline, head, neckline, kind of back into that shoulder area, So I would say for how extended the market got this week, some of the resistance levels that the market is currently at probably be good to look for if you want to get bullish, man. Just a little bit of a retracement or sideways consolidation. But if we do break down, make no mistakes that will be a head and shoulders, and it'll be a pretty long-term one, so you expect a lot of bearishness to kind of come in after that. But obviously a lot of people are going to be looking at this December low. A lot of people are going to be looking, are we going to push higher this next week? I think one of the main things that you're going to want to look for this next week is going to be that Fed Reserve balance sheet on Wednesday. Okay. I don't know how much bullishness we would have on Monday and Tuesday. I don't think we'll have much at all. We will probably just chop around. We might pull down a little bit, but I think so many people will be watching that Fed balance sheet that comes out on Wednesday afternoon that when that comes out, if there's a significant drawdown, I think there's going to be a flood to kind of leave stocks. I think there will be a lot of people start to pull funds out of stocks because between insider selling, between the high correlation with the Fed balance sheet and liquidity they provide to the system, how extended we just got, the kind of resistance levels we just got into, and that's not even talking about the Qs. The Qs actually, well, they look like they're about to fill this gap that they had all the way back from August 19th. August 19th, they have this little bit of a gap, and they're really close. So could we trade like 0.5% higher on Monday or Tuesday? Absolutely. Like that's well within a trading day's range. That would be probably an easy do on Monday. I would be very cautious though about trying to leverage into some serious long positions right here, especially with a lot of the call buying that we saw going into next week's close with the options. So I think if we're going to see some selling to come in, it'll probably be in the second half of next week after that Wednesday Federal Reserve balance sheet kind of update that they provide every week. So be a little mindful of that. So if the market's just kind of hanging out, not doing a whole lot Monday and Tuesday, watch out for Wednesday afternoon. That might be what the market's looking for. If the Fed starts to taper back down the amount of capital and buying and liquidity that is providing into the system, you might see a lot of people come flooding right out of stocks. Anyways, Alpha Hunters, y'all have a great rest of your weekend. Take care. And, we'll have a short week next week. Don't forget, Friday will not be a trading day. So it'll just be Monday through Thursday this next week. Alrighty. Take care, Alpha Hunters.